When you're looking at the Fed hiking rates, the important question to ask is why are they doing it? And it's driven by the belief that the economy is now strong enough to remove stimulus. So to me, that's a bullish indication for the economy. And banks are essentially a proxy on the economy because they finance the economy. So I look at it as a net positive. I mean, there are things like concerns the curve will invert and flattening that pose some concerns. But we're in kind of new territory as far as looking back at what happened historically. And ultimately, it's hard for me to see long-term rates come down too far when the Fed's just starting to unwind what is a really big balance sheet.
I get that, but we've also got what's going on over in Europe really holding down the longer end of the yield curve, correct? I mean, it's an interesting time to be a bank analyst because you got to take a look at what Mario Draghi is doing in addition to what Jerome Powell is doing in terms of where that yield curve is going to go. So, Jeff, I'm just wondering if you can sort of rationalize how much in terms of assets do banks have levered to a yield curve versus other lines of business? Can you break that down for us?
I think that's where kind of you can differentiate a bit. I mean, to a large extent, larger banks are more asset sensitive than your smaller banks. I think you want to be looking at some of the trust banks. So they have, securities portfolios that have 2-year or less duration. Some of the universal banks have big capital markets operations because we tend to look at the 2-year, 10-year, but for the most part, the banks in the deposit market are borrowing a lot shorter than 2-year, and they're also probably lending at durations of closer to 5 years. So that 2-year, 10-year is certainly flattened, but I don't think it's quite the drag that people fear it is.
CCAR results out June 30th. Who's going to fare the best?
Well, I think everybody's going to do pretty well. I'm actually a little concerned that the market may have gotten a little ahead of itself as to how much the banks will be able to pay out. But I think you're probably looking at some of the usual suspects, kind of a Bank of America, a Citigroup, what have been underpayers, kind of getting up to speed and becoming, at or above industry payers.
You sounded concerned in your note about Morgan Stanley.
Yeah, I mean, I think when it comes to the CCAR, I think that the big area of concern I have is really some of the capital markets assumptions. I mean, we're looking at, I believe, the equity market's down 65% in the stress case scenario. That's really going to hit the brokers, a Morgan Stanley, a Goldman Sachs, more so than the pure banks. So, I mean, that's kind of the Morgan Stanley, kind of Goldman Sachs is the area I'm probably more concerned about payouts versus what the street's really expecting.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.